What is good, guys? Welcome back to the channel, and today's topic will be the AMD pattern and the advanced insights I will give you in today's video. So let's get right into it. What is AMD? AMD stands for accumulation, manipulation, and distribution. Meaning AMD describes usually how the market is moving, and in order to see expansion we need a manipulation, and to see manipulation we need accumulation, meaning a consolidation beforehand, which then can initiate the manipulation and therefore then transition into distribution. What this looks like as a pattern is usually we have, as mentioned, a range, and then price breaks out below the range lows or the range highs if it's a bearish AMD, trades below the range lows, and then we transition into expansion, which is then the distribution phase. Now, what most people do when they trade AMDs is they trade it as a pattern without a context. Like most people trade head and shoulders, but ICT traders, they tend to trade AMD as a pattern, meaning there's no higher time frame bias behind, no narrative, and they just watch out for an accumulation, some random manipulation, and then they trade the distribution, or at least they anticipate the distribution. Now, how do you define high probability AMD? As I already said, you always need higher time frame bias, because if you don't have a bias, you don't know where you want to look for a manipulation, and without a bias, you also can create a narrative according to the bias. Reminder, the narrative is always how price is moving, bias is where price is moving, meaning up or down. So the first step is always define a bias. Once you have a high probability bias, meaning you expect expansion into either the upside or the downside, then you can head over to your narrative and determine the key level. So first step, always have a bias. Once you have the bias, you then determine the key level. All right, that's the second mandatory step. Find a higher probability, higher time frame key level. I'm gonna use the daily time frame for the key level, but you can also use or refine the daily key level into an hourly or H4 key level. Once you have done those two things, you have the framework to watch out for an AMD. All right. Now, to have a high probability AMD, you also always want to incorporate a time aspect. What is the time aspect? For example, time of the day, time of the week, or even all the way down to time of the session. For example, for the weekly AMD, you want to use the Monday range. That's why the Monday range works so well. If the Monday range is a consolidation profile, so the Monday daily candle is closing as a consolidation or retracement against the higher from order flow, then that sets a high probability framework to look for a Monday range play. Why? Because Monday is consolidating, engineering liquidity above the Monday range high and low, and then once price on the following up day is trading above this Monday candle, let's say that's the Monday candle, we have the Monday range, ideally consolidation profile. So Monday range high, Monday range low. You can watch my video on Monday range as well for some more insight on that. But pretty much you want to watch out for Monday being consolidation profile. You need a weekly bias and you need a key level. For example, if you're bearish, you want to have, for example, a higher time frame PD array above the Monday range highs. Also, the economic calendar plays a large role. For example, if we have news, CPI on Wednesday, for example, or any other red folders during the week, then that's a high indication that high or low of the week will form around that session where the news is placed, meaning, for example, New York session where we have CPI on Wednesday. Then either on Tuesday, Wednesday, if we have the red folders being placed on Wednesday, for example, you want to watch out for price to trade above the Monday range highs, hit the key level, and then that's where you want to watch for price to form or give you a trigger in form of displacement from the key level. Displacement can either initiate post-news, or if we have the manipulation ahead of news, then also news can already be the distribution and send price into the Monday range lows and into a higher time frame objective, for example, a previous weekly swing low, which you aim for in your higher time frame bias. So that's an example of a weekly AMD. So if you go one time frame lower, you can also look out for a daily time frame AMD. What session do you want to use for a daily time frame AMD? Again, it always depends on the time frame context. For example, if you want to expect a London session high of the day, you want to use the Asian session as your AMD. Ideally, Asia session therefore should be consolidation. If Asia is, for example, expansion, then an Asia range play is much more unlikely. Why? Because we need accumulation for the following two phases of the AMD. Then another example of an intraday AMD would be London and Asia both being consolidation, and then New York being the AMD, meaning we have Asia consolidation, we have London being consolidation. For example, a daily seek and destroy profile where London takes out the Asia high and the Asia low, but fails to see expansion above or below the range lows. This can happen, for example, if price is trapped between two higher time frame PD arrays. For example, we have a bearish imbalance above and a bullish one below, and price not able to either close above the bearish one or below the bullish one. How can you anticipate this? Again, you want to use the economic calendar. If you know we have news in New York session or around London close session open, you know it's quite likely price could be in consolidation, and then you want to watch out for a manipulation ahead of news or during news to then see price go into manipulation and then transition from manipulation into expansion. First target is always the opposing side of the range, and then you want to watch out, is price able to continue to break below the range? If we see a closure below that key level, for example, the bullish fair value gap here, then you can use this as an inverse fair value gap to see further distribution lower. Now that's another insight in AMD, what you want to watch out for. If we are in an AMD, price usually won't return all the way back into like a bearish premium array which formed around the manipulation. That's what I see many people do wrong when to AMDs. They wait for the manipulation, then price drops lower, and they wait for price to come all the way back up here to give them an entry. But price gives a small retracement, then just drops lower, and people are left sidelined without getting a trade in. Why is that the case? You have to think logically, what is an AMD? An AMD is pretty much, we got liquidity building up at the range highs and range lows, then the market is taking out liquidity on one side, and then drops lower. So all the shorts, who have the buy stops above the range highs, get liquidated on this move higher. At the same time, all the longs which the market sucks in on this breakout, they put their stops at the opposing side of the range lows. So people who view this as a breakout and long this with their stops here, they also get liquidated once price breaks the range lows. So you see an AMD as a pattern which allows the market to set free a lot of liquidity, meaning we liquidate the buy stops above the range highs and then immediately liquidate the sell stops at the range lows. Now imagine you want to re-enter the shorts where you got liquidated above the range highs on the manipulation. The market won't give you this perfect entry at the range highs, or what I often see people do, they take premium and discount, take the low to the high, and then say, okay, I want to now wait for price to trade into a premium. But the key is here, the market does not trade back into a premium because all of that is a balanced price range. And if price is able to close below this higher time frame bullish fair value gap, price will use the inversion fair value gap as a point of reference for distribution lower. Meaning to get back into a premium, it would have to trade above this inversion fair value gap and trade back into the balanced price range. And as mentioned, a balanced price range is balanced, so price should not, or most of times will not, retrace back into the upper half of that balanced price range. Now, this does not mean it can never happen. Sometimes you will see price give you a perfect entry, but more often than not, you always want to think in probabilities. What is most likely? You won't see price to get back above the premium of that dealing range you mark out, And that's one case where the understanding of when to use dealing ranges or how to use them and when to use them is off. In this case, the dealing range theory does not apply. Now, those are the two main AMDs you always want to watch out for if you are day trading, short-term trading, or you are intra-session trading, meaning you trade New York session or London session, and you are in and out of the trade within the same session. If you have noticed, those ranges, the Monday range, the session ranges, they also can be viewed as a higher time frame candle. For example, the H4 candle, the H1 candle. So you can also use, for example, an H4 candle, and if it has a time-based aspect like a session high or session low, then you have a high probability candle to look for an AMD. Obviously, the candle has to be a consolidation profile. If the candle was an expansion profile, then that's a low probability candle for an AMD. You always want to have a higher time frame candle, the Monday candle, a session candle, which can be an H4 candle. The market profile of that candle should be consolidation. And remember, you always need a bias and a key level. Then that sets a high probability framework to look out for an AMD. Now, what are the ways to enter an AMD? There are multiple ways to enter an AMD. Depends on the overall context, but I will briefly show you guys what I use to enter AMDs. If you have, for example, a higher time frame validation, meaning you have, let's say, a bearish key level here and a higher time frame strong high, which has taken liquidity from a previous weak high above. For example, we have the weak high here. Price runs this weak high and then drops lower, forms the key level here, and then we see the manipulation into the key level. Then you can short the manipulation, put your stop above the strong high, which has taken liquidity, and then you can enter during the manipulation already and aim for your target. Now let's say if the risk reward is too low or you don't have that strong high, then you want to wait for a lower time frame confirmation, meaning you drop to a lower time frame. For example, if you have an hourly key level, you want to use the M5. For an H4 key level, the M15. For the daily key level, for example, the Monday range, you want to use the hourly time frame. Right? H1, H4, M15, and H1 you want to use the M5. That's the time frame alignment you want to use as an orientation to know, okay, you have the proper time frame alignment. You drop them to the time frame, so the M5, and then you want to look out for your change in order flow to happen inside this manipulation leg. Once you have the change in order flow, you can enter the trade here on the change in order flow. If that's lower time frames, put your stop above the manipulation high and aim for the range lows as your first target. Go break even on that trade and then aim for the higher time frame targets. The third entry option is if you don't get in a trade here on a confirmation or the turtle soup, then you can use a retracement. But the key here is you don't wait for a retracement all the way back up into the highs due to the things I just outlined previously. So you want to wait then for a closure below the range lows and then look for a new trade to form here at that key level. Again, for example, turtle soup, or again here a lower time frame confirmation with the new bearish key level price formed once we have inverted this one, and then maybe price also left behind here a bearish imbalance on the sell side, which you then can use as a high probability key level since we have inversion and this value gap being aligned. So the key level of the former buy side is now aligned with the key level of the sell side. Always remember, that's now a higher time frame market maker sell model. You have old levels of buying on the buy side become now new levels of selling on the sell side. Now to give you some real price examples and to show you that all of those things happen on all time frames, DXY monthly chart, what do we have here? A clear range. Price breaks out of the range and trades into a monthly key level. So range, manipulation, and then distribution. And now we are trading at the range lows. We got this bullish value gap, where price previously was trading inside. Now you can see, we have not seen a closure below yet. You can see this candle is slightly closed inside. Another question is DXY able to close below this value gap and then use this as level of distribution lower into that low, for example? Or if price is now willing to close back inside the range, back above this imbalance, then we would expect price to trade back up to the opposing side of the range, because then we have seen a manipulation of the range highs, of the range lows, price not willing to break out, and therefore we expect price to continue in that range. That's why it's so crucial that if price is trading at those pivotal levels, to closely watch how price is trading at the range extremes. Now let's drop down to the more of the lower time frames to show you guys how you can use AMD on those time frames as well. We have the daily time frame here. Now let's take a look at the previous weekly Monday range AMD. We have the previous Monday candle here. Monday range high, Monday range low. I told you you want to have a bias, a key level, and you want to have the Monday candle being a consolidation profile. Now, bias would be bearish, as we are in bearish order flow. Monday is indeed a consolidation profile. You can see the candle body is relatively small compared to like those expansion candles. And we also have this inverse value gap as a key level. Last week, also CPI week, I told you if we get manipulation ahead of news, then news can be distribution. We have seen here a manipulation ahead of news on Tuesday, and you see CPI day then was expansion, distribution. If we close below the Monday range lows, below the AMD, we are likely seeing continuation into higher time frame target. What's the higher time frame target? Previous week's low and previous monthly low. Now we go to the hourly. Here you can see Monday range, price trades above the Monday range high. That's where you want to look for a change in order flow. Forming here. Imbalance, and then price on CPI day, distribution lower, into the range lows, and then we close below. So the next day, you want to look for continuation from that range low, the inversion PD array, into the target. You see, if you would have waited here for a return back into a premium of that range, right, if you use that as a range, you won't get an entry here if price is truly bearish, because all of that up and down move is a balanced price range. You can see here the next day we form an opening gap, and then the opening gap is your key level, which you want to look out for a continuation into the higher time frame target. Gap, sweep into gap, and again, what do we have here? Key level, manipulation into the key level. This high, which formed in Asia. Price could have also gone above the Asia highs, but in this case, since this H1 high already is resting in the opening gap, which is the key level, you want to watch out for a reaction above this high and this high. Price trades above the high into the key level, then gives displacement, closes below this small imbalance, below this up close candle, displacement, and then you can change the order flow and you can short the next candle, stops above the high, and then aim for the higher time frame low. So intraday AMD, weekly AMD, and what I also know the monthly AMD. So now you have 3 examples of how to use or how to spot and align AMD with the higher time frames. Now I hope you enjoyed this video. I would appreciate a like and a comment. And if you want to sign up for Asset and Capital, the sign-offs for July, they are live right now. You can find a link below, and see you guys again in the next video.